Day Trading Crypto for Beginners. Do you want to learn how to day trade cryptocurrencies and earn $500 a day by doing so? If you do, then be sure to watch this video all the way through, as it's important to follow the steps in the exact order as I present them. Let's dive right in with my buddy Salvatore. Salvatore, take it away!
Thank you, Nick. We frequently hear about the enormous profits from day trading stocks, but what about day trading cryptocurrency? In this video, you'll learn day trading crypto for beginners using popular crypto trading techniques, and we'll set out on the path to realizing the lifestyle of your dreams. Let's begin. First and foremost, when day trading crypto for beginners, it's essential to have a structured approach. So you're not going to trade every day and you're not going to make money every day. The extreme volatility of cryptocurrencies, as shown in this image, has created an ideal atmosphere for day trading crypto for beginners. Before trading Bitcoin or any other cryptocurrency, you want to wait until you have a high volatility reading. You can still make a modest return on your trades even when volatility is lower than average. However, you will maximize your gains during times of high volatility. Day trading crypto for beginners also requires the right timing and the good liquidity in order to make precise entries and exits. Warning: many crypto coins and crypto exchanges are very illiquid and don't have the liquidity to offer instant execution. The term illiquid refers to a coin's limited trading volume and its difficulty being bought or sold without significantly changing the price. As such, day trading crypto for beginners should focus only on the most popular and widely traded coins. The 5 most liquid crypto coins right now are Bitcoin, Ethereum, Tether, BNB, and Solana. So, before day trading Bitcoin or any other crypto coins, the first thing you should do is check how liquid the cryptocurrency you want to trade is. You can do this by simply verifying the 24-hour volume of the crypto trade. We provide a good free resource to read and gauge the market volume of any coin in the description section. As mentioned before, cryptocurrency day trading does not require daily trading. You should day trading crypto only when all conditions align in your favor. In this case, avoid the trading on weekends and limit your trading only to the days with the highest trading volume. So, if day trading fits your personality type, fasten your seatbelt because now Alisa is going to reveal how day trading crypto for beginners is done. She is going to show you what indicator to use and how to use it to maximize your win rate and your profits. Alisa.
Grazie, Sal. As Salvatore said, the first thing you need to do is to choose a coin with high volatility and liquidity. Step number 2 is to apply a simple technical indicator called the Money Flow Index indicator on the 5-minute chart. This indicator, also called the MFI for short, is used to track the activities of the smart money, also known as professional traders, in order to gauge when financial institutions are buying and selling cryptocurrencies.
Thanks, Nicole. I'll take the reins now. Hi, I'm Patrick. Continuing on. Because the MFI takes volume into account, it is generally considered to be a better trading signal than other signals, such as relative strength or moving average convergence divergence. The recommended setting for the MFI indicator is 3 periods. Also, you want to change the default buy and sell levels from 80 to 100 and from 20 to 0, respectively. Next, Colin will show you how to use the MFI indicator to maximize your win rate.
Alright, now the third step is to hold off until MFI hits the 100 threshold. When the MFI number is 100, it means that big traders are attacking the market. Smart money can't cover their tracks when making purchases, so they inevitably leave a trail of their activities in the market, which can be verified with the MFI indicator. technical indicators aren't always accurate, so you'll need to add additional conditions to your day trading crypto for beginners strategy in order to fine-tune it. This implies that you should focus on the crypto price reaction and ignore the first two MFI values of 100 for the duration of the day. As shown in this chart, the price must hold up during the first and second 100 MFI readings. In other words, the price on the second MFI reading should be approximately the same or higher than the price on the first MFI reading. If the price falls after the first two MFI 100 readings, it suggests that a down day is likely. Next, we'll determine the right time to buy and what technical conditions must be met.
Gordo here to explain the fourth step to you. In this step, we can now wait for the third MFI reading above 100. It doesn't necessarily have to be the third MFI 100 reading. You can take every other MFI 100 reading if you'd like. If time doesn't allow you to catch the third 100 reading on the MFI indicator, you can simply pick the next one, as long as all the other technical conditions are satisfied. Then, when that MFI reading equals 100, we need the candlestick to be a bullish candle. This candle must close near to the upper end, resulting in a candle with extremely tiny wicks. If you don't know what a candlestick chart pattern is or how to use it, don't worry, I'm here to help. Just click on the link in the description section. This brings us to the next important thing that we need to establish when day trading crypto for beginners, which is where to place your protective stop loss in order to minimize your losses, and also where to take profits. Here's Pamela to explain.
The final step, step number 5 in day trading crypto for beginners, is to place your protective stop loss below the low of the day. It would be wise to exit the trade if it breaks below the low of the day, as this will indicate a change in the sentiment of the market. This can also signal a reversal day. You can be more flexible when it comes to your exit strategy. However, the only rule you need to follow is to take profits within the first hour after your trade got triggered. Holding the trade longer than 1 hour will result in a lower win rate, as that is what backtested results have shown. Let us know how this strategy worked for you in the comments below. Like and subscribe.